Hey everyone. Well, kind of a mixed day to say the least. Mostly selling down for the day, and we're going to get into it. As always, subscribe to this channel, click on notifications because what we're about to go over is very timely. I am going to cover AMC tonight. I am going to cover GME. Everything will be in alphabetical order. I do have a litany of them that I'm going to get through. There's over 20. And there's just there's some real changes that happened today, and we just really need to address them. So I'm just going to jump right into it here. And again, everything's in alphabetical order. So this is AMC, and I just want to address what's going on here because people are not really. I'm trying to figure out the right way to say this and the nicest way to say this. People are not really using their heads in this, and it's really a greater fool theory, right? People are buying it up here, and I had this happen with GME too, where all of a sudden my Twitter account was blowing up when people were buying it at $400 or $500, and now they're still in it, and that's back to 166. So I'll get into that one in a moment, but my point of showing this is this can get a lot worse than you think it can get. Okay. This is just the beginning of this downward move. So let's get rid of these indicators for a minute so you can understand exactly what happened today and why it's so bad. So this was your range, okay? And you can say that you're going to hold forever and we're never going to sell and all that, and that's fine. Here's your problem. Someone's selling, right? So whether it's the people that are selling that are telling you that they're not selling, or whether it's just simply institutions selling, that's what's going on. Someone is definitely selling. So there's hundreds of millions of shares of this company outstanding. There is no way in the world that a couple people or a million people holding 1,000 shares is going to make a huge impact on this. So you really need to think about what you're doing here and where this can go to, because this can get a heck of a lot worse. So let's just get into this. So this range right here, okay, just this range alone, you're between 72 and 35. You broke this range today. This is the first time you've broken this range, and it's telling you which way it's going to go. So I would not be surprised to see this down even more after hours. Let's see what we got going on. So looks like it's only down $1 after hours, but I would not expect this to hold here. Now, what's going to happen is there's no support here. Okay. This is just 3 days of somebody, people buying it, trading it up and doing very well. So after this breaks, this 1415 level, that's where you're heading. That's your support level. So, and if you don't think it can happen, it can happen. And the reason that I'm being so vocal about this is because I just watched this happen with a bunch of people with GME who said they were never going to sell, and they're completely blown up. And that's why I'm being so vocal about it tonight. So please be aware of what you own. There is absolutely no reason for this to go to this 72 level. I know you have people out there telling you it's going to 100,000. It's not. Okay, it's probably going to $15. And if you want to look at this and try to figure out levels where it could stop at, okay, the next major moving average is $15. Okay, I'm not saying it's getting there tomorrow. I'm not saying it's going to happen in a day, but this is very clearly on a trend down, right? There is no short squeeze here. So just keep that in mind. Now, if you want to look for other levels that could be reasonable where it could stop, you can use Fibonacci and just throw levels in and understand, okay? And you can see how this one level, all I did was take the top and the very bottom of the base here, right? And this can give you levels and give you an understanding of what's going on. And you can see very clearly that the low is kind of interesting, that this low right here actually hits this fib level. So breaking this level, your next level of support is actually that right here, which was your low of that bar, which is also very interesting. It shows how technical this has been trading. So breaking this level, your next level support is $23. Breaking that, I would say it's 15. So just please keep that in mind as you invest in this company. So AXP, American Express, that's in the indicators. So you're seeing somewhat of a divergence here in stocks, right? we're seeing these large caps go up, and they're continuing to rally. And this one in particular, I just think looks really solid, really, really solid. And we're just grinding higher. You know, the market was all over the place today. The stock just did its own thing. I see no reason to do anything with this. Just stay in it. This channel's not going to change. The only thing I'd be concerned about is that you have earnings coming up, and that's not till July 23rd. Last time we sold down on earnings. This time we sold down on earnings, sold down on earnings, sold down on earnings. See where I'm going with this? So there's patterns to this, and that's one of the patterns. When this comes out with earnings, it sells down. So just be aware of that. CELH was one that we were in on the newsletter. I tried to catch it yesterday, and I did catch it. Just didn't do what I wanted it to do. So I saw this break. I liked that it was still green, so I gave it till this low, right? And when we took that low out and we cleared that low out, that was pretty much it. I gave it to 70, and it didn't hold, and that was our stop. So it was a 2-point loss. I actually did try and trade this again today, and I'm going to walk through that. So we did break down here and hit right along this line, right? And I just thought we might bounce up off of it. It did not do that at all. I mean, as a matter of fact, what we did was we came down to the 68 level, bounced back up, right, for a little bit, looked like we were going to get there, and then just completely took it out. And again, we talk about these H patterns. See this H pattern here? See how it broke it, then tried to get back over it, then it broke the next one down, right? They walked you down all day long. Hopefully this has stopped for those that, you know, are like the name, are still in it. But that is just classic straight out selling. So this can get worse. This can get a lot worse. So hopefully you hold that 50-day and you hold that point of control. But when you start seeing these red bars like this, you know, you need to get out of the way. You need to get out of the way, get in cash, and look for another spot to enter it. You know, these things, people think that this is a correction. This is not a correction. I've seen corrections. They're substantially worse than this. It's why you always honor your stops. You know, it's very interesting. I was talking to people today, and they were, you know, in the community, and they were talking about the, you know, I keep getting stopped out. I keep getting stopped out. Getting stopped out is not the problem. Getting stopped out and having it repeatedly go higher after you're getting stopped out is the problem. Getting stopped out is protecting your capital. You should actually go, oh, good, I'm getting stopped out, right? That must mean it's going lower because you're so proficient at where your levels are, right? So if somebody just used the simple level that we gave yesterday of 70, they saved themselves $5 today. Sure, they lost $2, but would you rather lose 2 or 7? So just start thinking a little differently. I would not go near this. I understand the excitement that it's near this level, but I just would not go near that. CMG is one that we have from the top 10 list for the week. Now, their earnings, let's just click on this events button and see where we are. So these earnings are coming up, which is one of the reasons, frankly, I didn't put it in the newsletter because I don't want to be in it that close to earnings. I don't mind if I was in cheaper and staying in the earnings, but I don't want to get in there, right? Because we just don't know what's going to happen with earnings. But I like the action here for the people that are asking. I mean, you broke through that 1600 level we were looking for. You're moving up, and it's not paying attention at all to what the market's doing.
Market data connection.
So I think that's really good. Let me just lower this little British guy from one of my trading platforms. There we go. Okay, so I think this looks great, and this could really go higher. Anything that has a huge base like this, like we did with the Amazon trade. Anything with a huge base that is a large cap name is doing just fine. That's not the problem. Look at Amazon. And it's interesting. No one asked about it tonight. But this is one that we got in at 35.88. And I just want to point this out. So when you're seeing here is, see this range? You're just forming a flag. I'm not crazy about the fact that, you know, we're not going higher. But we're just really sitting there and bouncing around. See that base for a year? That's very similar to this, right? See how it's just been basing? This is exactly what you want. It's very healthy. Comes down, tests the 200-day, holds, breaks it, but doesn't really get much lower, re-rallies back up. I mean, this is exactly what we're looking for and what you should be looking for. So I like it. I like it, and I think it's got massive potential. It's probably something I'll look at buying after earnings. And maybe I have to pay up a little bit, but who cares? So DIDI, I'm just going to go through this on an hourly so that I have about 30 data points. And I'm going to get rid of these indicators for a moment. And I will leave this in. So, well, before I do that, let's just talk for a moment about this, okay? So here you are, right, on 1263, okay? And people are excited because we've gone from here to here, right? And you're up $2 and 20% in 2 days. Here's your issue with DIDI. You don't know what the next shoe that's going to drop. In other words, it's not DIDI that has become the problem. If you heard ARK today, they're talking about getting out of their stock holdings where the companies are headquartered in China because they're afraid. They don't know what's going to happen next there. So they're very simply just getting out of the stocks and not dealing with the risk. And I don't know what the next shoe to drop here is. I really don't. I don't know if there is another shoe. I just know that the risk of these stocks has increased dramatically. And until they figure out what they're going to do, they being the government and, trading on a U.S. exchange, and they figure out how they're going to handle these issues, until this is resolved, this exists. This tug of war exists. And what's going to happen with this is it's going to have a huge overhang, and people are not going to want to be in these stocks. And by people, I don't mean retail, I mean institutions. No institutional trader or fund manager is going to want to explain why he bought this and then something else happens to it. And I think it's one of the reasons, frankly, Cathie Wood was so vocal today. So I get it. I see it. What I would say is that even if you were trading it, your trade's probably over, right? You had this wedge line that you were trading against, or this trend line that was doing well, and you were holding it. Not anymore, right? Now you broke it today. And now you're sitting right on that support level. I would not chase this. I would not go near it. This can always get worse. And for those that remember Luckin, one day it was at 40, the next day it was at 2. So, and that was the one that was going to beat Starbucks. So, wow, I sound so negative tonight. I'm not negative on the market. I'm negative on some of these stocks that I see, and I see what's going on. So, and I'm trying to get people to not be injured because there's a lot of games going on, and there's just not a lot of protection right now from people and from the investment banks at all. So, not that there ever really was, I guess, but it just seems like it was just cleaner before. It seems like anything can go public now. GameStop, I want to go over this. Just so we're all clear, this is when it broke the 50-day. Remember when AMC broke its 50-day? That was today, okay? So now here you are. We broke the 50-day here. Since we broke the 50-day, okay, you're down 20%, all right? So my point to you is that this 8, this 21, and this 21 crossing the 50, these are bad signals, okay? So when you see this stuff, no matter if it's something that you think that you want to be in for the rest of your life or not, you need to prepare for this going to a much lower number and be okay with that. If you're not okay with that, you need to seriously consider selling these names. This one in particular. There is absolutely no reason why this is not going down to test this 131 level. Now, it may hold here for a while because your 200-day is here, and you see all this volume. This is volume by price on the side. 273 million shares traded at that level, okay? So you have support at that level. There is a support level there. But be aware that this has gotten absolutely hammered. And if you think this hasn't gotten hammered, right, just look at where it is. Look at where you went from when this was at the high to where you are now, right? So You're down 66% in 5 months from the high. If you don't choose that high and you go from here, you're down 50%, right? And I know people that have bought in here, and this is kind of one of the reasons why I'm going over this. So you have a decision to make. You might not like the decision. You might say, I'm going to hold on to it forever. This stock is never seeing these levels again. Okay. I mean, that is abundant. That should be abundantly clear to everybody. If you're looking at what's really going on here and how it's rejecting here. And I'm sure I'm going to get tons of like little comments on YouTube about this. And I really just don't care because I'd rather save people, the ag. So see this? We tried to get above it. We couldn't. We couldn't get above it here. It hit that level there. There's somebody up there that is just hammering it every time it gets to that level. They're just letting it get there and then just hammering it. It's never getting here again. So you're going to have to understand that. Now, whether or not you want to be in the company, that's great. Make sure you want to be in the company if it tests its 200-day moving average, which is $100. So I'm not saying the stock deserves to go back to $20. But for anyone that thinks that it deserves to be at $300 or $400 doesn't really understand, okay? So it's very realistic for this stock to trade down to this level, to trade to a simple VWAP line, 120. So if you're not willing to go through another 30% drop, you have some decisions that you need to make. So just be aware of that. So to me, both those look like absolute toast, AMC and GME. If you know, and what's crazy about it is if you look at the AMC puts, they're not even that expensive. So that tells you that there's really a lot of real, there's a lot of downside there. There's more downside, I think, in the short term on AMC than GME. So in regards to GRWG, this is exactly what you don't want to see. Okay. Here's your downward trend line for the year, right? And we're testing it. Everyone's sitting around waiting for this federal legislation. Okay, when you're waiting for this stuff, you're not the only one that's waiting for it. So just like when news comes out, if that news comes out, that's a real issue. But I would not be chasing this. Look here, let's do it this way. Let me show you why, and show you what your issue is. Let's get rid of these for a moment. And let's just look at this. Okay. Here's your volume by price. You went through your point of control and your VWAP by volume by price today. And you went through it like butter. You went straight down. You opened at the high, you closed at the low. When you see an open at the high, close at the low like this, and you see a volume spike, and it's hard to see that volume spike, isn't it? Maybe we can do relative volume and that'll show it a little clearer. Yep. So when you have a relative volume spike like that, where you're 2x volume and you have a huge red bar down like that, you're just getting started. So if you're in this, my advice is that if you take out this low, get out of the way. Doesn't mean the stock's going to go down to zero, but you need to say, well, on this rising wedge, where's the wick? Right? Where's the starting point on the rising wedge that I just broke? You see, and hopefully you see that rising wedge. Maybe I'll just draw it real quick. So, right? So there's the rising wedge that you broke. Okay? So when you break those, and just like upside, right? Downside, same thing. And so what you're looking for is here. Right? So you'd be looking and saying that this can get to $33. If you're not comfortable with this getting to $33, you have some decisions that you have to make. Okay, so the market is dynamic. It is not static. So it's very easy for me after been doing this for a while, and I won't say how long because I get teased about it, but I would just lay this out there. Like, it can always get worse, and you need to have a plan. And I'm the biggest proponent of the NASDAQ right now, and I think we're going a lot higher. But that does not mean that certain sectors and certain groups can't get absolutely decimated during that. And it doesn't mean that we're not going to come in and correct 5 or 10%. We haven't even had a day where you've had a 5 or 10% correction, to my knowledge, this year. And they exist. They happen. So be aware of that. They are out there, and we could be setting up for one with the breadth that we're seeing. And that's why you put your stops out there. So, and if you're getting stopped out a lot right now, my advice is sit on the sidelines and wait. LRN, I'm not going to spend a lot of time on this, but it was important to me because if somebody's in this and trying to figure out what to do, I wanted to answer the question. You see this wick? Wicks are price rejection. I'm going to link that candlestick video back for the new members that have, or new subscribers that have not seen it yet. I'd strongly recommend you watch the candlestick video. The patterns, when you start recognizing the patterns, it'll save you a lot of time and a lot of heartache. And everyone here would recognize this one, right? It looks like a bearish engulfing right at the top of a rising wedge. This is not where you want to be. So my advice is that if you take out this lower low of this and that 21 day, which is basically the 30 3/4, you need to get out of the way unless you're willing to go back down to about $29. And if you are, that's fine. But that's where you're going. And I just want you to be aware of that. You really need to get above this level. You really need to get above this wick before you do anything. So, okay. Lulu was one from the top 10 video. You opened at 367, you ran up, and you had a decent day, right? And then you closed at 377. I mean, there's not really much to say here. You know, could you have done better? Sure. But it is what it is. And I don't really see any reason to spend a lot of time on it. I mean, your volume was great. Everything was just great. I mean, you know, you're very rarely seeing stocks do this, like break out and turn and go. And this is really nice to see. That whole sector is on fire for some reason. You know, all these little, I won't say little, but all these retailers, I'm not sure what's going on, but they are on a tear and they are not pulling back, like American Eagle and, you know, that whole other sector that's out there, like AutoZone. Like, look at these stocks. I mean, no one's talking about them, but they're going through the roof. So, you know, maybe start looking at some of those, start looking at some different sectors, because there's definitely money being made out there. But, you know, when you're in tech and you're buying tech because you want the growth, you're going to go through some pain sometimes. So 3M, I just wanted to point this out because I find this significant. You're above the 50-day of this. 3M is a very defensive name where people put money in when they think that things are going to sell down. If you'll note, if you compare this sell down probably to when we saw, you know, a rise in the NASDAQ. So they're probably like a little skewed. I would say that this is, and this is why I'm showing it, this is kind of telling that we're going to go probably a little bit lower on the indexes and on some of these stocks. So what we're looking for here, what we're going to see here is we're just going to see this continue to grind higher. Okay, I expect this to take out this high and move higher. It's a slow mover, you know, 10% gainer, and you could see this huge channel right there. So Overstock was on my list of top 10 that I thought was going to break out and go, and it did not do that. It did the exact opposite. And this is a great reason and a really good reason why you need to sit there and have a real plan. I call them processes, but you need a plan. So like when this broke up here and came up, you need to know that this is an evening star. You need to know that, right? Just like you had to know that this was an evening star, because by me knowing that, I had an edge over someone who didn't know that, right? So when I broke this level and the evening star pattern was starting, I knew my first level was here. So I have a decision to make here at 94. Am I willing to hold this to 92 and see if it holds? If the answer is no, I have to get out of the stock. Okay, my answer would be no. Just FYI. And then this happens. So this saved you by understanding that process from 94, just to put it in perspective, by having a process. So, you know, one of the things I tell people that watch these videos and listen to these videos, it's not just the money that you're going to make off ideas that may happen. It's the process that you're going to put in place so you don't have huge drawdowns like a lot of people had today, right? You should not have a huge drawdown today. You should have a drawdown today, most likely. Everybody had a drawdown today to an extent. I had a drawdown today. If someone's telling you that they make money every day, they're lying. It doesn't work that way. What you have to do is just understand it's part of the game, and honor it. It's not your ego. So just check your ego at the door with it, right? It doesn't mean that you're wrong. It just means the stock is wrong. So, and it happens. You just refine, you get better. So I wanted to show this really quickly. I really like this name a lot, and I expect this name to take out highs. But I don't know that it's going to do it right now. So we broke this downward trend by closing right here, right? But if we focus on this, here's your cup, okay? Here's your handle, right? So if I just show you this other trend line that just happens to be right here because I was showing this here before, and this is where my trend line is now, and we can clone these. You always clone them, and then you just see where they fit, okay? So you need the same trajectory to have a range. So this easily could come back down to here, this 396 level. What you want to do by looking at this, throwing your indicators, is get an understanding of what you're up against. If you break that 21 day, there is nothing but air here until you get to here. I'm sorry, let me draw that a little bit better. 399, there's nothing but air until you get to 399. Okay, that's what you need to get to. So that's what you're shooting for. Now, out of that, then you're looking at getting to this VWAP and the 50-day, which is 368. If you think it can't happen, it can happen. We've seen it happen. We've seen it happen over here. So don't think that it's not going to happen because you're in the stock. So, right, that's pretty much it. I like the name a lot. I'm really hoping it doesn't break the 400 level, but I really do like that name. So let's see. SE. I mean, look, I was trying to figure out why I did this one because I get like 300 requests, and I did this one because I really wanted everybody to see this. If you're finding this video helpful, if you could do me a favor and please click the like button. I'm trying to get in front of as many people as humanly possible to show them what it takes to be truly successful at trading. So see this trend line? That's why I have this in here. And this other channel up here, there's a higher one up here that's completely irrelevant for this conversation. So you see how you're breaking up here? See how you're riding that low? Right? And then you break out, and then you break out here. Now look. What happened when we got to it? And now we're following this one. What's that pattern? We just talked about it. Bearish engulfing. I got a bearish engulfing, and I failed at the upper trend line. And I'm sitting right on this lower trend line. A lower low through that breaks this rising trend line and takes you to here, which is 253. So I would avoid this. And if I was in this, I would sell it. This is not something I would be holding right now. Winter earnings. You have time on earnings, but this is not something I would be in. I'd be gone. SNBR, I just wanted to talk about very, very quickly. So you can see this, okay? You're trying to break out, you come back down. Try it again, comes back down. 1, 2, 3. See this? There's very few times a triple bottom breaks. Okay, very few times that a triple bottom will break. This is a stock that is not really tied to any other kind of stock. It's kind of doing its own thing, right? Sleep number. Look at this. Okay, so I broke my wedge, and then on top of breaking that wedge, I broke this. So all I have to do now, looking at this, let me slide this over so we can really look at this number. All I have to do now is just get above this and go, and really just push to this 121 level. So I think this can go. I think this has potential. That's why I wanted to show it. If you look at this, you really can't see the move. So let's just throw in relative volume. That'll probably clear it up a little bit. And it does. It just tells you that you're about one and a half times average volume. But it's hanging in there, and I like it. I like it a lot. So let's see what happens with it. Space, I don't know that I have to look at my news. I'm not even sure that they priced this yet. But this pretty much went to where we were talking about. We drew the fib levels like I just did on AMC, which probably, infuriated a bunch of people, but that's okay. Hopefully it helps someone. But this 52, right? See how we couldn't get through that? And then they come out, and then they do the secondary. You sell down, can't hold. You break this wedge line, come down. Now you're sitting right on a fib level. If you break this fib level, you're going to $25. So, and throw the indicators in. You're sitting right on the 50-day. If you break the 50, which you haven't done, right, since you crossed it, you're going to the 200, which is going to take you to $30. And that's going to happen fairly quickly. So just keep that in mind. This is not something that, not something you want to play around with. You would want to avoid this. at a minimum, and I don't know if they price this today or not, at a minimum, you need to stay away from it until they price the secondary, which I would imagine by the action has not happened yet, but I don't know. I haven't had time to go through all my news yet. In regards to Tesla, so let's get rid of some of this stuff. Okay. So here's your major trend line, right? I'll just show this again. Here's your major trend line. Okay. And you go right to that 21 day, 8 and 21 day. And what happens? You're at the low. You close at the low and you close the 21 day and you're breaking this down. You break this and you're going to here. You're going to 635. That's probably your first stop. And then you'll probably test this level. This is setting up, this failed up here again to get through. So this is setting up to roll and possibly come back down. This is the first day of a lower low. So usually there's 2 days of these, and then maybe we could build up again. I don't think this is going to get absolutely hammered, but I do think it's coming back down to these levels. TTD was one we had in the newsletter. This was kind of disappointing because it obviously stopped us out today, but we have to honor the process. You know, the channel, it's staying in that channel, but it's just got to go. You know, it's just not working. So we're better off just waiting for this to sort itself out and go from there. You know, that's what you need to do. And there's no reason to be in this right now. I mean, it is very disappointing, but it's just the market that we're in, and this is what's happening with it. So we're just going to get stopped out. A lot of the stuff we're going to lose little bits of money on or break even on, and some are going to work and continue to work. Like, you know, Apple's working, Amazon, you know, the Amazon trade's working, Microsoft is working. I mean, there's names that are working. They are far and few between, but it's very clear that money is going to large cap, very large cap mega tech companies. So UPST needs to hold this 110.82 level. If you break that level, you're going to have a bad day. So just keep that in mind. I really think that it's probably going to break. And I'm going to show you why I think that. We're going to get rid of all these horizontal lines. You broke your major channel line today. Okay? You broke your major channel line today. And you need to understand that. You tried to get through this. I was looking at this. I was looking at it as possibly buying it. You were breaking this wedge. We were trying to get up through here. I was looking for, you know, I wasn't even going to wait for this. I was going to wait for it to finally do it. And nope. And this is what happened. Now look at that. Okay. Is that something that you want to own right now? If you didn't know what it was, would you want to be in this? Hopefully the answer is no. I have the 8 crossing, the 21 crossing, and the 50 crossing. I can't get above my downward trend line. This essentially is a bear flag that's breaking to the downside, and I'm breaking my major trend line. You need to get out of this. That's my advice. You know, that's what I would do. That's my opinion. I would not be holding this. It's an excellent company, excellent earnings, but you know, as I've shown this chart several times, so people can understand this. Okay. It's not always about what they're doing. So this company in 1999, 2000 was making $14 billion. Okay. Now at this price, okay, they're making $50 billion. Okay. During that period of time in 20 years, we lost 32%. You're not even calculating out what a dollar was worth then versus what a dollar is worth now. So we're just looking at the price movement in and of itself. So when you think that it can't get worse or it's a great company, it can always get worse. And it can always last longer than you think it can. It's why it's so important to have a process and stops. I can't stress it enough for beginners and new traders. So here's a classic example. You know, there's a gentleman that I follow that really has got his game down on Twitter. And it's really very interesting to watch because he saw it yesterday and was talking about the reversal. And it's like, oh, it's halfway up this bar. Remember I talked about these bars being reversals or a price rejection rather. And he saw this and he's like, oh, I better close half my position out. It didn't do what I wanted it to do. And I even talked about that yesterday, that half bar that should make you somewhat concerned that you didn't follow through. So what does that mean? Okay, what that means is that you need to kind of get a process down and understand and start looking for chart and pattern recognition. What do you do with this now? This moves over. I mean, this is done. This is not going to trade back up to those levels anytime soon. Okay, this is just clear rejection of this level, clear selling at this level. Everything that was bought yesterday was puked out today, and I closed at the low. Okay, I would imagine that we try to rally during the day and then we sell back down and we retest this 48 line. If we don't hold 48, you're going to 41. So that's really where my thoughts are on it. And it's not something that I would be inclined whatsoever to get in front of. I would tell you that this trade is completely busted and that you need to be on the sidelines. And if you're not out of this, you need to be out of this, or I'd love to know your reasoning for staying in it. At this point, no matter what stock this was, if I was in something like this, even like here, and I was in it forever, and I saw something like that, it's time to go. So, because unless you're willing to ride it all the way back down to, 20. So remember, it stairs all the way up. It's an elevator on the way down. So that's what the charts look like. So Vail, I just wanted to go over, a lot of people are looking at these names. They're not really doing anything. Maybe that's not the worst thing right now for names, but that's not really doing anything. So take a look at it. 23.14. If it gets through it, maybe. But I just don't see it going anywhere. I wanted to cover it on purpose. I get it. You can put your money there and it's safe, but it's a slow grind, and it probably goes up. Probably goes to the 25, 26 level. We have a line up here. I wonder why that line's up here. Let's take a look at something while we're here. Yeah, so let's go back and see why that line's up there. Let's go to the monthly. So that's why these lines were up here. So, yeah, I mean, you see how it's trying to get through, trying to break through and do its thing. So, and it's just having issue with it. So that's kind of my concern with it. So I would be cautious. I'd be cautious of this line and having all these wicks. But it looks like right now we're trying to stay over that, which is great. That's exactly what you want. So just trying to see if there's anything else going on here that's really worth talking about. And let's just take a look. So, yeah, I mean, maybe you get up to these levels. Maybe you don't. I don't know. I mean, there's not really a lot that's being shown here, right? You have the cup. I just don't see it. Let's go here. Let's get rid of all this. Let's go. There we go. Get rid of all of them. I just don't see a reason to do this trade. I like the base here, but look. And it's not like I don't see this, but I would actually use this right here. See, you broke out of it, and then from there. So that's what I would use. Now here, 2306. So, I mean, that's really what you're looking for. If you want to do it, you're going to get to 25, 27s. You're going to get to those levels we saw on the monthly. It's just a question of whether or not it's worth your time. So I think we spent enough time on it. ZIM, this is disappointing. I really like the name. We don't have a position in it right now, but, I really, really like the name. And I really think that you just got to watch this play itself out. There's really no reason to do anything with this one. Just let it play itself out. See this downward trend line? See this rise? Now you have an H. Just stay out of the way and let it work itself out. If you are in this, you must use this as your stop. That's my opinion, 37.60. So that's it. As always, just if you need me for anything, email me or on Twitter, and we'll go from there. Thank you, everyone. Have a great evening.